Hey everyone, welcome back. Today we're diving deep into the world of Warren Buffett, one
Yeah,
of the greatest
all
investors
time. Yeah.
of all time.
Yeah.
We're going to be breaking down a YouTube video where he shares some of his incredible investing wisdom.
Some great advice in there.
And the best part is,
Yeah.
you don't need to be a Wall Street whiz to understand it.
Not at all.
We're going to break it down into practical insights,
Yeah.
actionable stuff that you can use whether you're just starting out or
Absolutely.
you've been investing for years.
Doesn't matter your level.
Doesn't matter what
Yeah.
level you're at.
Yeah. It's all good stuff.
So
Okay, cool.
to kind of kick things off,
Yeah.
Buffett bought his first stock when he was just 11 years old.
Oh, wow.
Yeah,
That's amazing.
I know.
11 years old.
it's incredible.
Jeez.
And he talks about learning from his early mistakes,
Yeah.
which I think is so important
Gee.
because even the best investors,
Everyone makes
they've
mistakes.
had bumps along the way.
Yeah, you got to learn from them, though.
Absolutely.
You know.
So let's get into the core of his philosophy,
Right.
which is really heavily influenced by Benjamin Graham's book, The Intelligent Investor.
Oh, yeah. The Bible of Value Investing.
It's like a
A must read.
yeah, if you're into this kind of stuff,
For sure.
absolutely foundational.
So one of the key takeaways from that book
Yeah.
is understanding that a stock
Mm-hmm.
isn't just a ticker symbol.
Right.
It's actually a piece of a business.
Yeah, like you're buying a little tiny piece of that
100%.
company.
And I think so many people forget that.
Oh, for sure.
So why is that so important to grasp?
Well, I think when you realize that you're not just buying some letters on a screen,
Right.
you start to look at it differently. You start to think like a business owner.
Yeah.
You're thinking about the long term. You're not just chasing those quick gains.
Day trading.
Yeah, day trading, exactly.
So it's not about trying to time the market or chase those hot stocks.
It's about finding companies that you believe in,
Yep.
that you think are built to last.
The long term.
Yeah.
Absolutely.
And that brings us to another really key concept,
Oh,
Mr. Market.
Mr. Market.
Who is this mysterious Mr. Market?
So think of Mr. Market as like this emotional, unpredictable, kind of crazy guy.
Okay.
And every single day he comes to your door and he offers to buy or sell you stocks
Right.
at a certain price.
Okay.
Some days he's super optimistic.
Yeah.
Other days he's just like doom and gloom.
Like a roller coaster.
Total roller coaster of emotions. Yeah.
How do we deal with that?
The key is to remember that he's not your friend.
Okay.
He's not your financial advisor.
Right.
He's just there to offer you prices.
Just a dude
Exactly.
with some prices.
Just some prices.
Yeah.
And your job is to ignore all that noise and be disciplined and
Right.
focus on what you think the business is actually worth.
Right.
Detached from his crazy emotions.
Easier said than done.
It is definitely easier said than done.
Yeah.
But that's where this concept of margin of safety comes in.
Okay. Tell me more about that.
All right, so margin of safety is basically all about minimizing risk.
Okay.
So, when you're looking at an investment, don't just look for something that's a good deal. Look for something that's like a steal.
The steal.
Yeah, like so undervalued
Oh, wow.
that even if your calculations are a little bit off, you're still protected.
Like a buffer.
Exactly.
Yeah.
It's that buffer that gives you peace of mind.
Yeah. That makes you sleep at night.
Exactly.
All right. So we've got a solid foundation,
Okay.
understanding the business,
Mm-hmm.
not letting Mr. Market control us,
Right.
having that margin of safety.
Yeah.
What else can we learn from Buffett about identifying great businesses?
Well, he often talks about this idea of a business being like a castle.
Okay.
And the best businesses have a wide moat around them.
A moat?
A moat, yeah.
Protecting them.
Protecting them from competitors.
Okay, so what are some examples of these moats?
Well, think about patents. They give a company exclusive rights to a product or technology,
Right.
or location.
Okay.
Imagine a business that's like right next to a busy train station.
Oh, yeah, prime real estate.
Prime real
Yeah.
estate, exactly.
Yeah.
And then, of course, there's brand recognition.
Okay.
Like Coca-Cola.
Mm-hmm.
Their global brand is a massive moat.
It's so hard to compete with that.
It's almost impossible. Yeah.
Right.
And strong brands, they can often charge higher prices.
Which means more profits.
Exactly.
The bigger the moat, the harder it is for someone to come and steal their customers.
Yeah. It's all about that protection.
Okay, so we got the fundamentals,
Right.
the moat.
Mm.
And I know Buffett talks a lot about the importance of good management.
Oh, yeah. Absolutely.
And what can you tell me about that?
Well, he says that a company needs to have leaders who are capable
Okay.
and honest.
Mm-hmm.
But ideally, he says the business should be so good
Yeah.
that even an idiot can run it.
Okay.
Of course, he's being a little bit funny there.
I love that.
Yeah.
Straight talk.
Yeah.
But his point is, even with a great team,
Things can go wrong,
things can go wrong.
you know?
Yeah.
So you want a business that's kind of inherently successful.
It can kind of run itself.
Yeah, exactly.
Right.
And that's why he looks at the management team really closely.
Yeah.
He wants leaders who are competent, ethical, and aligned with shareholders.
Okay, so this is all great.
Yeah.
But how do we actually find these fantastic businesses?
Right.
Where do we begin?
This is where it gets interesting,
Okay.
because Buffett doesn't focus on finding the perfect investment.
Oh, really?
No, he starts by getting rid of the bad ones.
Interesting. So it's more about avoiding the losers than finding the winners.
Yeah, kind of.
Okay, how does that work?
He asked this question.
Yeah.
Imagine you could buy any 3 businesses in your area
Okay.
and hold them forever.
Forever.
Forever. You can't sell them.
Wow.
You're stuck with them.
Okay.
How would you choose?
Oh, I'd be a lot more careful.
Exactly.
I wouldn't just jump at anything.
You'd be thinking long term.
Big time.
Right.
Yeah.
And that's his point.
Okay.
By focusing on what you don't want to own,
Mm-hmm.
you naturally narrow it down to the best options.
So you're kind of ruling things out.
Yeah, it's like a process of elimination.
Okay.
And to really drive this home, he uses this analogy
Okay.
of a 20 punch card.
Okay.
So imagine you have this card with only 20 punches,
Mm-hmm.
and each punch is an investment decision.
In your whole life.
Wow, that puts things in perspective.
Right.
Yeah, you really got to make them count.
Exactly.
So each punch is super valuable.
Super valuable.
Yeah.
You got to be
You
selective.
can't just waste them.
No, you can't.
Okay, so we've learned about understanding the business.
Yep.
Ignoring Mr. Market's mood swings.
Right.
Margin of safety.
Hmm.
Finding those moats.
The moats.
Having a good management team.
Yeah,
And being super selective.
absolutely.
Anything else to add to our Buffett toolkit?
One more thing.
Okay,
Focus.
focus. Okay. He says once you've found those rare, amazing investments,
Mhm.
you got to concentrate on them.
You're not spreading yourself too thin.
Don't spread yourself too thin.
Okay.
Stay laser focused.
So it's not just about diversification for the sake of it
No, it's about picking the best.
and putting all your energy there.
Exactly.
Okay, and this applies to life too,
Absolutely.
not just
I think
investment.
our goals anything.
Yeah, it's so easy to get distracted by shiny objects.
Oh, yeah.
But real success comes from focusing on what matters.
What moves the needle?
Okay, so before we move on,
Yeah.
one question that I have is,
Right.
why is it so important to actually understand a business before you invest?
Mm-hmm.
Can't you just look at the stock price
Ah,
and kind of its past performance
right.
to get a sense of whether it's a good investment?
That's a great question.
Yeah.
And it gets to the core of Buffett's approach.
Okay.
See, the stock price just tells you what the market thinks
Right now.
at that very moment.
Yeah.
But it can be influenced by all sorts of crazy stuff.
Like emotions.
Motion, speculation,
Right.
news that might not even matter in the long run.
So it's Mr. Market again.
It's Mr. Market be Mr. Market,
Yeah.
you know?
He might be way off.
Yeah, he could be totally wrong.
Yeah.
But when you take the time to understand the business,
Mm-hmm.
the products, their advantages, their management,
Yeah.
you can make a much better judgment about what it's really worth.
So like the intrinsic value.
The intrinsic value.
Yeah, exactly.
It's like the true worth of the business.
Yeah.
Regardless of what Mr. Market's saying.
Regardless of all the noise.
Right.
And that's what Buffett's looking for.
Okay.
He wants businesses that are trading at a discount to that intrinsic value.
So he's finding those bargains.
He's finding the bargains.
Okay. So it's not about timing the market.
Yep.
It's about understanding that underlying value.
Yep.
And waiting for the right opportunity.
Patience is key.
Yeah.
Absolutely.
This all makes sense.
But I'm still a bit perplexed
Okay.
about how to actually determine that intrinsic value.
Right.
It seems a little daunting
Yeah.
for someone who's not like a financial expert.
It can seem overwhelming,
Yeah.
but it's not impossible.
Okay.
And that's what we're going to dive into.
In part 2.
In part 2,
Okay.
we'll break it all down.
Awesome. Looking forward to it.
Me too. Welcome back.
All right. So before we take a break,
Yeah.
you were going to shed some light
Right.
on how to assess a company's intrinsic value,
Yeah.
which can seem pretty intimidating.
Yeah. It's definitely one of the harder parts.
Yeah. Where do we even start?
Just like a puzzle.
It feels like a puzzle.
Yeah.
A very complicated puzzle.
Well, it's not rocket science,
Okay.
but it does require some digging.
Okay.
One way to start
Yeah.
is by looking at the company's financial statements,
Okay.
particularly their earnings and cash flow.
Okay, so we're talking like revenue,
number.
profit margins,
Profit margins.
how much cash they have on hand.
Exactly.
Okay.
You want to know how much money they're bringing in?
Mm-hmm.
How much that is actually profit
Right.
and how they're managing their cash.
Right, because you don't want them just blowing it all.
Exactly.
Okay.
But Buffett doesn't just stop there.
Of course not.
No, he digs deeper.
Right, because numbers can be kind of,
They could be misleading.
yeah, manipulated.
Exactly.
Okay.
So he also considers qualitative factors.
And like what?
Things like their competition,
Okay.
the strength of their brand,
Mm-hmm.
the quality of their management team,
Right.
and the long-term potential of their industry.
So it's like you're looking beyond the numbers.
They got to see the bigger picture.
Yeah, it's like reading between the lines
Exactly.
of the financial report.
Yeah, you want the full story.
Okay.
Buffett's looking for companies that have staying power,
Okay.
solid profits, and a bright future.
So it's not just about how much money they're making today.
Right.
It's about their potential to keep growing
Exactly.
for years to come.
Long-term growth.
Yeah.
That's the key.
And that's where that moat comes in.
A moat is crucial.
Yeah, the wider the moat,
To better.
the more likely they are to withstand the competition.
Absolutely.
Okay, so assessing intrinsic value
Yeah.
involves analyzing those financials, understanding the business itself,
The whole picture.
and evaluating that long-term growth potential.
Yep.
Not a walk in the park,
It takes work.
but important.
Oh, yeah. It's crucial.
Okay, so let's say we've done our homework.
Okay.
We found this company.
Yeah.
Great moat.
Mm-hmm.
Awesome financials.
Yep.
Promising growth.
Okay.
We're ready to buy right.
Hold on.
Wait.
Remember Mr. Market?
Oh, right.
He might not be giving us a good price yet.
Okay, so we got to wait for him
Wait for the right moment
to be in a bad mood.
when he's feeling down.
Yeah, so he gives us a discount
Exactly.
on this company that we love.
Patience is key.
Patience.
Yeah.
Okay, so Buffett is known for his long-term outlook.
Oh, yeah. He's in it for the long haul.
He's not looking for those quick gains.
No, he wants to own businesses for years,
Oh.
decades even.
So it's not about timing the market.
No,
It's about spending time in the market.
that's it.
Okay, I get it.
Good.
But waiting.
Yeah.
That's tough.
It's not easy,
Especially when it seems like everyone else is making money
right? You see the market going up,
and you're just sitting there.
and you're like, come on,
Yeah.
I want to get in.
How do you stay disciplined?
It's all about having a plan,
Okay.
a clear investment philosophy.
Right.
Remember those 20 punches?
Oh, yeah.
Every decision counts.
You got to make them good.
Exactly.
So you're not just jumping in
No,
out of fear of missing out.
a FOMO is a killer.
Okay. So it's about trusting your research
Yeah.
and not getting caught up in the hype.
Tune out the noise.
Yeah.
Focus on what you can control.
Easier said than done.
I know.
But I think we're getting there.
We're getting there.
Okay. So Buffett often compares investing to baseball.
Oh, yeah, that's a good one.
How so?
Well, you don't have to swing at every pitch.
Okay.
You can wait for the perfect one.
The one you can knock out of the park.
Exactly.
Okay. So you're being selective,
Very selective.
looking for those opportunities
The best ones.
that fit your criteria
Mm-hmm.
and could give you big returns,
Yeah. Yeah.
quality over quantity.
Yep, absolutely.
Okay, but the market can feel really chaotic
Oh, yeah, it's a wild ride.
and unpredictable.
For sure.
It's easy to get overwhelmed.
It's a lot to take in.
Yeah, all the information.
All the opinions.
And all
It's
this-
overwhelming.
Yeah,
But here's the thing.
okay.
You don't have to be an expert.
Oh, thank goodness.
No.
How do we filter out all that noise?
Buffett says, focus on what you can control.
Okay.
You can control your emotions,
Mm-hmm.
your process,
Right. Yeah.
and your research.
So it's about focusing on the fundamentals,
Yeah.
doing your due diligence,
Absolutely.
and not getting distracted.
Block out the noise.
Yeah.
And remember, you're not alone.
Okay.
There are tons of resources out there
Yeah.
to help you learn and grow,
That's a good reminder.
right?
And hey, speaking of resources,
Yeah.
here we are
We're breaking it down.
with this deep dive.
Easy to understand.
Yeah.
Actionable advice.
Okay, so in part 3,
Yeah.
we're going to explore even more tips and strategies.
They've got more Buffett wisdom to share.
Awesome, I'm ready.
Let's do it.
All right, so welcome back to our deep dive into the mind of Warren Buffett.
Yeah.
We've already learned so much
Tons of great stuff.
about understanding businesses, finding those moats, being patient.
Yeah, the fundamentals.
Yeah, but there's always more
Oh, yeah, he's full of wisdom.
to learn from the Oracle of Omaha.
That's right.
So what other nuggets of wisdom can we extract today?
Well, one thing that really stands out about Buffett
Ah,
is his focus on the long term.
okay.
He often says he wants to buy businesses he can hold forever.
Forever.
Yeah, like forever.
That's a long time.
That's a really long time.
Most investors are thinking about like the next quarter.
Right. short-term gains.
Yeah, so why is this forever perspective
Yeah.
so important to him?
Well, it goes back to that idea
Okay.
that a stock is a piece of a business.
Mm-hmm.
And when you buy a business,
Yeah.
you don't expect it to be an overnight success.
Right.
You're thinking long-term.
Yeah.
You want it to grow over time.
Like planting a tree.
Exactly.
Yeah.
You nurture it, you let it grow.
And eventually it bears fruit.
You get those juicy returns.
Okay, so it's about playing the long game,
The long game.
not chasing those quick wins.
Exactly.
And by thinking long term,
Yeah.
you're not getting caught up in the market's ups and downs.
Right. You're ignoring Mr. Market.
Yeah, you're not letting him control you.
Exactly.
Okay, but is it really realistic to think about holding a stock forever?
Well,
Things change.
they do.
Companies come and go.
Right.
Industries get disrupted.
It's a fast-paced world.
How can you know
Yeah.
that a company today will still be relevant
Right.
in like 10, 20, even 50 years?
Well, Buffett knows this.
Okay.
He knows not every business lasts forever,
Okay.
but there are certain things
Okay.
that suggest a company might have what it takes.
Okay, so give us the Buffett checklist
Yeah.
for finding those forever companies.
Number one,
Okay.
the moat.
The moat's back.
The moat is always there.
Okay.
Does the company have that durable competitive advantage?
So it's protected
Yeah, it can defend itself
for years.
years and years.
Okay.
Think about companies like Coca-Cola,
Mm-hmm.
Disney, Google.
Yeah.
They have these incredible brands,
Right.
networks, technologies,
So hard to compete with that.
almost impossible.
Right.
And number two,
Okay.
you want companies that can adapt.
Okay.
The world is constantly changing.
Right.
So companies that can evolve
Yeah.
are more likely to survive.
Okay.
Look at Amazon.
Okay.
Started as an online bookstore.
Right.
Now they're everywhere.
Yeah.
They do everything.
E-commerce, cloud computing, entertainment.
They're a beast.
Yeah.
So it's not just about being great today.
Right.
It's about being able to change with the times.
Be agile, be forward thinking.
Okay.
And finally,
Yeah.
you want a strong management team,
Okay.
one that cares about the shareholders.
Right.
They're focused on long-term value.
Yeah. Not just short-term profits.
Exactly.
So you're trusting the leadership
Putting your faith in them.
to guide the company through
They're thick and thin.
all the challenges and opportunities.
That's right.
Okay, so no company can guarantee success forever,
Right.
but by looking for these qualities,
Yeah.
you're increasing your chances
You're tilting the odds in your favor.
of finding those long-lasting businesses.
Absolutely.
This has been incredible.
Yeah.
So much great insight.
Buffett's the best.
But I got to be honest, I'm feeling a little overwhelmed.
I get it.
It's a lot to take in.
It's a lot.
Understanding the business, the moat, the management.
Yeah. Waiting for the right price.
Right.
Considering the long term.
It's a process.
It's a lot.
It is.
But I guess you don't have to be an expert overnight.
No, you don't.
Right.
Take it one step at a time.
Yeah.
Learn the basics.
Mm-hmm.
Develop your own philosophy.
Yeah.
And keep learning.
It's a journey,
It's a journey.
not a destination.
For
You're
you.
always learning and growing.
Always improving.
And the more you learn,
Yeah.
the more confident you'll become
That's right.
as an investor.
You got this.
And it's not about being perfect or
Yeah.
beating the market every time.
It's about making good decisions.
Yeah.
Managing your risk
Mm-hmm.
and building that portfolio that works for you.
That aligns with your goals.
Exactly.
Okay, so if you had to boil all this down
Mm-hmm.
to one key takeaway from Buffett,
One big lesson.
what would it be?
I think it's this. Investing is more about temperament than IQ.
Oh,
It's about having the patience, the discipline,
mm-hmm.
the emotional control,
To stick to your plan.
Even when things get tough.
even when Mr. Market is freaking out.
If you can master that,
Yeah,
you'll be well on your way.
to success.
That's a great way to put it.
Yeah.
So as you embark on your investing journey,
Mm-hmm.
remember Buffett's wisdom.
The Oracle of Omaha?
Understand the business. Seek the moat. Be patient.
Yeah.
Focus on the long term and trust your instincts.
And do your research.
Exactly. We hope this deep dive has given you the tools